Well, we just had one of the biggest rallies that we've had in well over a year. And now the question is, what's next? The president is holding a meeting tonight, and we have to see what happens after that meeting at 9 p.m. this evening. But let's plan ahead of time on what's transpired so far, because there's been some developments. And one thing's telling us that we might already be overbought. If we just start with the basics, we can obviously see the enormous rally that we just had, and we can all see the trend that we have in here. We're going to make that tighter in a second. But I do just want to point out the obvious. And we can see that in the past 2 days from the bottom undercut, you've already moved 4.65% in futures market. We did have a nice undercut here, but there's a lot more to it. So let's get to it. 27.5% of you that watch these videos do not subscribe. Please click subscribe, all notifications. I purposely do not run ads in the middle of these, so it kind of plays with the algo a little bit. You liking and subscribing helps with that. Also, these videos are linked together, so you want to click all notifications. Let's go. Now, we're going to just start with the fact that, yes, you are hitting what? A low. So you have what? On the highs, we're making lower highs. Okay, I'm not adding a ton of value there, right? If we click this and we just drop it over, and I just want to get a sense and a lay of the land. And what we're doing is just looking at these wicks. And then what I'm going to do is I'm going to clone this again, and we're just going to drop it in. And we can see where it drops right on these levels. And that's not really great either. So what we're going to do is we're going to grab it for a second and push it in. And now when we do that, we're going to note something. We have a pattern going on. And that pattern is to undercut and then rip. Undercut and then rip. Undercut and then rip. So we've done it 3 times now. And what we want to do is not convince ourselves that this is something that it's not. So is this a bounce? Is it a bottom? The bottom line is we don't know. There's some characteristics that are telling us a little bit about what's going on here, and we went through this yesterday. And what I'm going to do is I just want to show you the characteristics so that you can make your own decision. So whenever you bounce off a bottom, to form a bottom, you want to have huge volume. You want the volume to be bigger, and you guys already know this. Is that huge? It's decent. It's above average. It's above my little line. Is that enough? Well, when we bottomed down here, we had substantially more in April, didn't we? When we bottomed here, we had substantially more as well. Now, this can go 2 ways. 1, they just don't believe it. 2, we don't have a lot of players because it's a short week. 3, we could take a look at the volume and we could compare the volume to what's been transpiring on the selling side. The problem with that is that you don't have exhaustive volume. You do here, and we could say that's the exhaustive volume. And then we could have this being the retest and coming from there. So if this is exhaustive volume and that's the retest, then we'd have to see if you have some kind of divergence that's going to stick out. So if we roll over this and get into the RSI, we don't really have a divergence. What we do have for the first time, and this is important because this is something that you can kind of hang your hat on, as we've been trending down, you haven't had the RSI break out and make a higher high. Is that the be-all, end-all? Does that mean that it's definitely a bottom? No, but it's a start. We've undercut here on the RSI, and we've definitely have cut under that 30. And if we look historically when we cut under, this is an area where you tend to see bounces. You can see it in here, and then obviously what happened in April. And let's just pull this up a little bit, and then I'll drop this down, and we can drill into this. And you can see that led to it. This was up and then an undercut when we had more winning and liberation to be had. And then, of course, we can see what transpired in here. And if we look at this over 6 years, it's not very common to be down here. As a matter of fact, between 24 on, and this is going back to 23 on, it's not very common at all to be down here. So when we see this, we have to pay attention to it for 2 reasons. 1, any piece of news you're going to bounce hard on. And that's exactly what happened the other day. Why is that? Because you're so oversold that you have to have some kind of relief. So just the mere fact that Iran said, yes, we do admit that we do know the US exists and we have had talks, that was enough to get it going. Has anything really developed from that? No, and we're going to get more color on that tonight that we're going to have to pay attention to. Now, this was a super interesting development for me in the option market today because they did drop the call wall substantially, and we'll have to see where it adjusts tomorrow. But you had that 653 level, and then from there, you got over it and you stayed over it, and we still have the higher high here as well in the cash market, which does obviously mimic what's going on in the SPX. But I think that that's interesting. Now, if we go here and drop this, this is our first close over the 12, and you may say that's not a big deal. I think it's a start. And that's how this always begins, with a start, right? It doesn't mean that it's over, but we haven't had this. But at the same time, we still have a declining 12-day moving average. And yeah, you haven't gotten over this, really emphatically over it, since February. So it's been a month since we've had this. And we finally do have that, and we're rallying over. And now we're going to see if we get a pull back. But what does all this mean, and what do we have to really pay attention to with this? And again, super important to pay attention to this from my standpoint, because it tells us a lot. We still are declining. So we would drop into lower moving averages. So then we click over, and I'm going to get rid of the pre and the post. And what we're going to do is we're going to look at a 3, a 5, and an 8 daily moving average. And we're going to look at that on a 15-minute chart. And again, I'm not the brightest bulb, so I color code them. And when red's on top, it means stop. Green's on top, it means go. And you can see this throughout history. It'll tell you like when you want to pay attention, when you don't. And when you're rolling down like this, if you were using something like this just as a guide, it was literally telling you every time you were over your 8-day moving average to sell, like over and over again. And here we are. Now we're trying to cross, and we do have a 3 that's pointing up. And so then what we start doing is looking for anomalies. I start looking for different patterns. Is there anything different about this than what I've had in the past? And candidly, not really. If I had to pick one thing, I could pick the trajectory is faster and more significant than anything that I've had in February and March. That would be the first thing that I could say. But did we make any kind of higher high? No, you didn't. You ran up to a neckline and then you dropped at the neckline. And then you could actually argue that some parts of those necklines are actually a little further up, couldn't you? And we didn't get there. So we have to look at that, and we have to be respectful of that. And it is what it is. Maybe we come back and backfill some. That's usually what happens with true bottoms anyway. You come back, backfill, and then you fill up from there. So that's partly what we have to focus on. But the more glaring thing to me is this. Now, if you watch these videos, and this is why I say subscribe, because all this stuff is linked. I try to link it together so we can follow through and develop a plan. By doing that, it just allows us to go, oh, hey, this is what happened on Monday. This is where we are on Wednesday. What do we think here? So this is the 200-day, the 50, the 20, and the 5. And this is just a very simple breadth chart. Now, what do we get from this? Well, long, intermediate, short, and then ultra short time frames. But we can see here that this takes a longer time for the 200. And we're going to get to the 50 in a minute because I want to show you something. But whenever the 20 starts to do this, you want to pay attention, because that rate of speed is something that we have not seen in the past. And the other thing, candidly, that you have not seen since this began has been a higher high. So if we go back for a second and just say, all right, well, we've made a higher high on the 20-day. And when has that happened in the past? And has that led to anything? We're not judging it. All we're doing is looking at what's happened and then saying, well, what happened after that? All right, well, we made a higher high here, and then we bounced, and then we lifted. But this was a very simple scenario, which you could fix by just stopping what you created. That's a lot harder here when you have a lot of different participants. We could see the bounce in here, and then we ripped up only to roll over again a month later. So when we start to see these patterns, it becomes very clear that there are certain times when this really doesn't matter, and there are times when it does matter. But it does mean that we have to pay attention to it, because it could be a bottom like this, or it could just be that we're going to go up for a little bit, and then we're just going to stall out and then roll back over. And what we're going to really use for our gauge for that in this scenario is going to be just the 50-day. And we're going to look at that for a sec, click on that on the 50 line. And I'm going to try to get that as close as I possibly can to 50. Cool. So we can see that when you're down here, yes, this one mattered. And when we popped up, the 50 went with it. This one mattered, and when the 50 went up, it stalled. So the breadth of names getting over the 50-day did not continue to push with the 20. It just did this. Is the 50 pushing right now with the 20? The answer is no. So that's not great, and we're going to have to keep our eye on this. We're really going to have to pay attention to this. And this is Wednesday, to be clear. So we do have Wednesday's data in front of us. Now, it can take a little bit for it to turn, especially when you're so overdone. But what we have to do then is take a look at the 20 in regards to the 5. And we can see here that you're over 80. So we've gone from 20 to 80, meaning 20% of all names were below the 5, and now 80% of all names are above it, and the 50 hasn't even moved, but the 20's on fire, and that can continue to push us up. What we want to be real cognizant of is this. When you have a 50-day here below 50%, and you get up into these areas where you get to this 90 level, which thankfully we didn't get today, you want to be careful because they can mark where you just start rolling right back over again. So tomorrow you want to watch this, especially going into the long weekend, because you've had such a big move so fast that unless you have another reason to see a lot of volume come in the market, a lot of buying come in the market, you can very easily roll over here because you're already on a 5-day, you're already overbought. Now, if we take that theory and you look at it over time, you'll note that, well, what happened here? Well, we rallied and we stayed up here. Why? Well, we stayed up here really simply because you were above the 50. Down here, when we did it and we spiked up, what happened? Well, we rolled back over. And I'm not talking about you're going to lose the whole gain, but that you could come back and retest maybe 50% of the move. Same thing here. We rallied up and then we came right back and we did what? We retested those lows. So you popped up, everything's groovy. And then what happens over time is you come back down and test. Why? Because the 50-day is not moving. So I would just say it again for us to think about it tomorrow as we watch this play out. And you would see that in this, that we're not getting there. We're not really moving there yet. That's one thing that we should pay attention to. I'm going to give you a couple others. But if we take a look at the SPY, and then we overlay the RSI with that, and then we drop it to a 4-hour, what do we see? Well, the very first thing that we would see is that divergence. But I want to show you this just so you can see it on a 4-hour on the cash. And if you take a look here, because you do have a divergence down here, and it's there in the futures market too, and they tend to hold. Divergences in the futures market, they do tend to hold. So if someone said, well, where are you going with this, Rocky? I would say, I think that you came too far too fast, and you may pull back, but I'm not so sure that we're going to put ourselves in a position here where we're going to have that we're going to take this out. I'm not so sure we take out the low, but I do think that there's some backfill that's due here. If we look at the market right now, you would say to yourself, oh, I have to buy, it's cheap. Well, we did make the higher high. The market didn't make the higher high. But if you follow RSI, this would suggest that you have the opportunity to push over that. This is a precursor to this. And I do tend to use that as a guide. But you have to take the other side of it too and say, well, the market bounced the way that it did because we were grossly oversold. Now 80% of all names are above their 5-day moving average. A whole litany of them got over their 20-day moving average. And the RSI is telling you that the oversold condition is completely gone on a 4-hour chart. So it's not the same market you had 2 days ago. And we're going into that speech tonight. We have to pay attention to that. And then you get into pattern recognition. And you can connect these dots and make your own decisions. But when we get into pattern recognition, we'd have to agree with that. If you came in short on Monday here, or I'm sorry, Monday, you come in and you leave and you're short, and you come in Tuesday to the gap, well, you're trapped, right? That would be a trap. Meaning you're short, oh, I'll just wait for it to pull back, and then it goes into face and it rips. You would have to think that those people are trapped. And then what those people tend to do is we call them the hopers and the dreamers. They hang out for another day and then they sell midday because their hopes and dreams are smashed and they're eating Hot Pockets. And then you start to see what's really going on out there. And you've seen that exact pattern I'm showing you in a lot of the sectors where you saw the stocks gap up and then you have the short lack of follow through there. And even in the smaller sectors, you had it, the gap and then the lack of follow through. Once you see that, you really can't unsee it. Even when you start seeing Friday, Monday, Tuesday gap up, Wednesday reversal, and that's in financials. The only thing that I think that I can consistently say here that I'm seeing is that you have sellers in energy and you have sellers in oil. That is very clear to me when I start looking at things from an RSI perspective that, yeah, you are rolling over here. If someone said, do you think that oil goes higher or lower from here? Barring huge escalation, and if you get boots on the ground and this gets dragged out, all bets are off, guys. I can only give you with what I have right now, right? And this is what I was trying to explain to people yesterday as well. I'm watching people online and debate, people talking about in the community about, oh, well, the Iranian minister said this and the president said that and parliament saying this. Like, you don't even know who's in parliament. So let alone what their structure is right now politically and who's in charge. So when we look at stuff like this, we have to do it from a base of knowledge from what we have, and we have to trade what's happening now. If I'm to look at this right now, to me, this is really clear what's going on. It's very clear that you have a position here and that this is getting tired. If you drop it on the 4 hour, I think it gets even clearer that you peaked in here, you tried to overcut, and that was a perfect short area. The other thing that I think is very clear is that they're getting out of energy. And I don't think that that's going to stop. And I'm short energy names. I'll just disclose it. I'm short energy names. I've got the lower low undercut right there. So maybe I'm right, maybe I'm wrong. But I look at that chart and technically that's a mess. And you're starting to see them really panic. And I do think that this got ahead of itself. And you would say, well, why would you say that? Well, Exxon's got a higher PE than NVIDIA. So when you start seeing things that are just silly, that doesn't make any sense, right? Like, no one would think that makes sense, that you have a higher growth rate in that than you do in NVIDIA. It's just silly. So you start seeing these divergences, and I pay attention to them, especially when they break through these levels. That's how I see energy. One of the things that we've been doing in the community is we shorted Gush. It did exceptionally well. If you're trying to get into the community, a batch of letters just went out. Check your email for it, but also make sure you get on the list, because after next week, then I'm going to have to close enrollment for a while just because of the demand to get in there. And I do all the onboarding calls myself, or give everyone the opportunity to. Anyway, so if we look at how this is setting up, you have your blow off and now you're working your way down. And this has turned into a great short. We're also seeing some of those other names come in, like Lyndell. We shorted this today. We shorted Dow today. And to me, these names look really very toppy. But most of all, you're seeing the toppiness in the energy. So if I just say, which way am I leaning? A sense of certainty. Yeah, I'm leaning towards OI8. And that to me looks like these things are getting super toppy. Trading is a completely different story. And I'll get into this in Saturday's video. I'm not going to do it for tonight because I want to really wrap up Saturday's video. But understanding the nuance and understanding your driving force allowed us to pick the SanDisk up yesterday and lock in. I think at the last part of it, we locked in 80 points on the last part of it today. It gave us huge opportunity because you understand that short covering is going to move a lot faster and you can really take advantage of that. Do I think that these are bottoming? I think they're trying. I don't know that you're there, but I do think that they're buying the value names. And I think that if you look at the names that are above their 50-day moving average, when 70% of those names aren't, and the ones that are holding, like Western Digital did, like Seagate did, there might be something to that, and they might be the names that you want to look at. But a lot of this is going to boil down to what happens tonight. How does that affect the bond market? How does that affect the dollar? You're in one big trade right now. And it was really just just here, I'll show you exactly the way to look at this. This is just an easier way to see the representation of it today. All day today, once you had that lockout over the call wall, that was it. And then you just broke right at the end of the day. And then you never had to come back from it because they were, they got out of that call wall position. They were just so short up here. They were able to work it off. And that's why it dropped so fast. And you came right back down to that 560 or 653 level. I think you want to have your head on a swivel tomorrow. And I think you have to ask yourself some big questions of how much are institutions really going to hold over a 3-day weekend if it doesn't really sound like there's a cohesive plan here and the other side is still talking about rhetoric. If I had to give you one thing that I thought was super interesting, I think the idea of the UAE when they came out and we saw the UAE bounce on this, come out and say, we're going to control the strait with Iran. And then Iran said, well, maybe, but we're interested in doing it with Oman. That was at least a recognition of something. If you can go, you can look that note up. It's on the tape. There's a recognition of that. And that does open up the bottleneck here. And just candidly, it does open up the bottleneck here for what you're seeing in some of these moves in the Asian market. And they're trading at a significant S&P discount, right? PE wise. So let's see what happens this evening and we'll go from there. That is it.